Welcome to the Salty Investors episode number 31. It is Friday, May 12th. How are you today, Tim?
Yeah, pretty nice. Bit of rain overnight. What about down your way?
Yeah, did we have any? No, we had rain yesterday.
Okay.
Clear skies today. Not, beautiful. What do we call this time of year? Autumn
Autumn,
weather?
winter. Yeah, something like
Yeah,
that.
autumn, I think. Yeah, pretty good. Got the hoodie on,
Yep.
matching, not matching hoodies. We'll have to fix that up next week. I'm sure they're the same.
Yeah.
So, as is customary, let's get to the salt. Well, I'll lead off because you might have a special one, and we want to save that up. So, my one's pretty simple. So, Labor is upset that the Greens have sided with the opposition to shoot down their so-called housing policy, which they say will build 30,000 homes. Now, the policy doesn't actually say that if you read it. It's a fund, and a fund that will cost about $20 million to manage every year. And there's another $5 million set aside for research, because apparently we need more research to understand why we don't build more houses instead of just building more houses, which itself is a dubious proposition because it's the government doing it. And it just goes to show the Labor Party doesn't have any real ideas when it comes to housing. These types of funds are a dime a dozen at the federal level. There's about 8 of them. The so-called Future Fund last year spent $500 million in fees and lost about $2.4 billion in value. But of course, current performance is not indicative of future performance. So what do you
Yeah.
reckon, Tim?
Oh, they're just throwing pennies at a problem that's, been going on for decades. And,
Yeah.
both sides are guilty of this. Like I saw the other bald guy get on TV going, oh, we're not, if we were in power, we would have done it differently. Oh, you were in power for
Yeah,
years, mate. Like,
yeah,
you
you
did
were in
nothing.
power.
Yeah, yeah.
Yeah. Well, the
Got to,
problem is because all these politicians, or half of them, are landlords themselves. And of course, they've got a vested interest in not flooding the market with supply, because the rents will go down and prices will go down. So we don't want that.
yeah. And there's
And
votes in it. Like, everyone
yeah,
who's not taken the risk and and put the money in, that's their savings account. Like, they've got no money in the bank. It's all
yeah,
locked up in their house. So if you start
yep,
hitting that, obviously you're not going to get re-elected. They're not stupid, these politicians. So
yeah,
yeah.
yeah.
So
Oh
yeah.
well,
I'll
typical.
yeah,
Yeah,
typical.
let's hear what you've got. What's your salt?
Well, normally I'm a bit salty about stuff, and I thought maybe I should change it up a little bit and be a bit grateful for things and for a change.
Ah,
I started riding my bike. I don't have a car. I could just borrow a car. And I thought, okay, well, I'll just have a quick look at, I'm using the roads here. I'm riding my bike along. How much are the
mm,
roads, how much am I costing the roads? Like, how much do people normally pay for rego and fuel excise? And I looked it up.
mm-hmm.
It's like $1,250 a year the average person pays for roads. So I'm
Wow.
just a quick thank you to all the, car car people out there, paying your rego and fuel excise for me to ride on the road free. And as an added bonus, I don't have to follow the road rules. So, like,
Well, you sound
thank
like a
you.
typical cyclist now.
Yeah, yeah. So, yeah, I just
Well,
thought I'd look
that's
it up.
good.
Yeah.
It's important to be grateful for things. There's not much of that going around. Not much gratitude.
No,
Uh,
no. So, yeah, yeah, I just thought I'd look it up, but I'm probably going to cost more on the healthcare system because, I'm more likely to get hit by a truck.
yeah.
There's a whole heap of negatives, but yeah, at the moment it's free for me to ride on the roads, and just
It's
no one
also
ever.
free. Remember how free it is when you're riding in torrential rain as well. That'll give you comfort and solace. And
Yeah, yeah, you should see the drivers when I'm going past and going, while they're stuck in traffic and they're just like frowning at
yeah,
me and, just nasty, nasty, and I'm just laughing. But yeah, yeah, when it rains, it'll be the opposite. So
yeah,
yeah, I have to look forward to that part.
yeah. All right. Let's get to some macro nonsense that we like to talk about every now and then. Um, this week, yeah, I just thought this was interesting. We did talk about it last time, which was that there's been a flight to tech as
Yep.
kind of the safe bet, and yeah, it's never been more expensive relative to the rest of the market. Tech, if you have a look at, and so even worse than the .com, slightly, and
Hmm.
worse than that one back there in the late 60s. That's the Nifty 50 blow up.
Oh, okay.
That's Kodak and all the big tech companies of the time. Kodak and probably IBM fits in there, and a few others. Motorola, no, not Motorola. I forget.
Yeah, it would have been Motorola,
Was it?
wouldn't it?
Yeah, it would have been Motorola, wouldn't it? Yeah. So that's that's more than 2 standard deviations above the rest of the market relative to the rest of the S&P 500. So as you see, all of those instances didn't end well. The graph usually turns down the other way. And so if you want to make the case that, that tech is the place to be, you've got to make a case that this time is different, which is always a, fraught argument to make. But maybe it is. Maybe, you can think of all the arguments in favor of it, like, AI and all the rest, all this sort of stuff. And, technology is just going to get a bigger and bigger share of the economy, which I think is true. Yep. But tech is also goes in cycles, doesn't it? So I just think that's an interesting data point. And that, do you have anything to say about that? I mean, do you have an argument either way?
Well, some of the ones that I like have gone up. For example, Amazon's up 30%. I don't know if that's classed as a tech. But 30% year to date is freaking insane. And you know what Meta's done. So
and Microsoft's up.
So that's the other one that's got away from us. So, but when you look at the long-term thing here, who knows what's going to come back in favor? I don't know if you saw that Druckenmiller stuff. His interview, like talking about commodities again. Remember those things? Those commodities that people used to buy. Like,
well, that's why I've included the next chart, because like commodities versus equity valuations have never been this cheap ever. Actually, if you in the last 50 years, give or take, and they usually presages a bull run. Now, of course, we've got the whole green technology thing going, but that doesn't really, it's not a real argument against it when you look at how much mining has to go on to get this stuff out of the ground, which I think a lot of the green advocates just sort of safely ignore the fact. When you add in all the land clearing that needs to be done for solar farms and wind farms, and then all the mining for those rare earth minerals and other stuff, copper, whatever else, it doesn't feel like we're saving the planet as they would have you believe. So I mean, and this is a difficult one for me because I think I'm more comfortable investing in tech than I am commodities and resources. It's a tough one. So I left the industry the last time we had I left in around 2001 when gold was sort of bottoming below $300 an ounce and everything took off, and then we had the great commodity bull market through the early aughts. I missed that one completely. I was off working overseas, different industry, wasn't even paying attention. So I'm not sure how to play it really.
Well, Druckenmiller might give you some options. Like he was talking the same as we were offline about copper. A hard landing hits, that's going to get really hit. But long term, they're going to need a whole heap of copper. So, they're sort of thinking that sort of play. But you got to wait for the, wait for the fat pitch. That's what he kept on mentioning. Wait for the fat pitch. Don't go too early here. You can't predict it. So,
So I mean that's sort of the thing, isn't it? What you want is a pullback so you can get in. I mean, you've already had a pretty big pullback with a lot of those rare earths commodities. I don't know if you saw just in the last week. I mean, Brent and crude has gone down quite substantially. I even noticed yesterday at when I filled up, it's the cheapest I've been able to buy diesel for maybe a year now. It went down another 5 cents from last week. So I don't know if these are early signs that things are finally actually slowing. The gears are grinding to a halt or not. But I just throw that out there. I mean, the only thing, Druckenmiller said all that, and then the only investable thing he said was to short the dollar at the end of it. That's the only thing he's sure of at the moment. He wants to short the dollar.
Yeah, that's a terrible move. Like you just, I don't know. I think he's out in a limb here, shorting the dollar.
Yeah.
Wow. Because the milk strength theory, like the dollar's terrible, but what's better than the
what's the alternative? Yeah.
yeah.
Exactly.
So, I don't know. I think that's pretty out there, but yeah, I don't know. He's got some good ideas. It's just it's hard when you get older because you've been hurt so many times. You start double thinking yourself all the time, and you don't actually take any action, which he understands himself. So.
But for someone like him, like he's not actually running anybody's money anymore. He's running his own money. He has made his money. It's not like he needs any more. So maybe for us, it's sort of like, well, I can't afford another, or I can't even afford to sit out the next sort of major bull market. I need to be in it because I'm not Druckenmiller, and I can't just sleep soundly on my piles of money every night.
Yeah. So yeah. Just interesting,
Need to do more homework on the commodities resources side of things. This week, what have you bought for us? Costco. This is a favorite.
Yeah, well, like we did Amazon, and this is the other, crazy company that no one can take on. Like it just seems unstoppable. Like you see here, they are diluting a little bit, but nothing to worry about. Price to free cash flow isn't, it's pretty steady there. The PE ratio is insane. 36 for a freaking supermarket is like, I don't know who's going to be paying that.
Well, it's a wholesaler, isn't it? Yeah.
So, but then you look at the margins and they're all crazy tight. Return on invested capital isn't too bad. That's not too bad for what you're getting here. So.
20% is good.
Yeah, that's pretty stable there. And if you want to own something in this area, like I picked Amazon, so this is the question. Do you pick Amazon or Costco? I can't think of anything else to pick because in a recession, you're still going to eat. So it's got a lot of downside protection here. And you get a little dividend. It's only paying out 25% payout ratio. They've got heaps of countries to eat into. Like this, even in Australia, they could build out they could double the footprint in, they still wouldn't have any.
Yeah, they just put one in up at not far. Where is it? Just north of Hope Island. It's not open yet, but you can see it from the highway when you drive past. Which that's going to do a lot of business. I was going to ask you there. Do you know why Costco gets such an efficient sales per square foot compared to the others?
Well,
just the way they pack it all in. I mean, I've been in one. I know what they look like.
Yeah, for example, they have way less SKUs. So a normal cereal aisle has about 350 SKUs or products. They've got 12. Right. And then they basically do pallets. So instead of people unpacking it and putting it all on shelves, looking nicely, they're just rolling in pallets and you have to go grab it off the pallets yourself.
Of course, yeah.
They prefer,
and of course they're piled, 30, 20 feet high in the air, aren't they? So
yeah. So obviously, they're going up. You're normally only going up to shoulder height normally, and they've just got the buying power as well. Like they've just the buying power to push through that per square foot. If you only got 12 cereal products. And you're saying, okay, we've got, 300 stores. Instead of going to them, we've got 300 stores, but we've got 350 lines. We've got the buying power is just going to be immense on those 12 lines. Like you can really smash down the supplier and make sure that they've got the private label. They don't do any advertising. The one that I like is the shrinkage. The shrinkage is 0.1% compared to 1% in a normal store. So
wow.
It's 10%. And you can imagine in a recession or even something worse, that's going to hold. And you wouldn't want to be owning, Kroger, anything else. Their shrinkage is going to go through the roof. So,
well, one of the other things they do here, I think I mentioned this the other week, is that they do home deliveries within a 20 kilometer square mile radius, and that's it. So they don't have large fleets of trucks going out all over the, within 100 kilometers to try and do
Service
people's
everyone.
home.
Yep.
Yeah. So they just they keep it down, and they've got the how about the whatever it is $60 to be a member every year. That's nice.
Yeah, well,
You know?
membership fees make up 98% of their net income.
Wow.
So 98% of them is just that membership. So they don't make any money at all from selling products. As you can see here from the margins, like,
Yeah.
Gross margin, normally it's between 11 and 14%. And then your
Yep.
operating margins, the only reason that's good is because you got the freaking membership fees.
Yeah.
So
So basically, to beat these guys out, you'd have to come in, operate the exact same model, and not charge a membership fee to get people in, because then you don't have you can get in without a card.
Yep.
But then you make no money because that's you'd end up having to charge higher prices.
That's your winning formula. You have to go to the board and say, yeah, this is what we're going to do. We're going to spend, billions and billions and building out all these places and, all this stuff to make nothing.
We're going to do an Amazon. So, hey, just trust us for 20 years. We're just going to do this for 20 years and we'll eke out an operating margin of 0.5% if we're lucky.
Yeah. So you can just see how the moat on this is just horrendous. Like, you'd have to be mentally ill to go up against these guys. Like, it's just totally crazy. Coles and Woolworths, they should be worried about that. All the staffing and everything. But these guys actually pay more than than the base minimum wage, because you haven't got them filling shelves. So the people that you're employing are actually, adding value to the business besides just filling shelves. They're, probably looking after people and running the whole system. Yeah. So you can pay a little bit more.
And they're better. I mean, so I deal with Campbell's, right? Wholesaler. Now it's quite often you go in there and the thing that you want, it's on a pallet to, like you can't reach it. It's like 4 meters off the ground, and you have to go over to the sales the front desk and say, "Can I get someone to come and get it for me?" And they go over there with their little thing, and it's 5 minutes out of your day. You go into Costco, the product's always down on the ground. There's always plenty to pick from. I've never had to do that. Not that I've been to Costco that much, but it's just better run. Like I have my doubts whether, Campbell's and that can't compete, and the distributors, they can't compete, but they do have different product lines. But if Costco wanted to destroy these guys, they just have to get into their product lines. They could offer cheaper prices, and they'd just kill it.
Yeah, but even if they don't, and the economy slows down a little bit, people will switch from those lines and pick. Normal households will, we'll go try their private label. We're saving 20%. Like, we need to make cuts somewhere. Let's go buy a big, 3 kilos of frickin' cereal in one hit, whatever it is, like a huge box of it, and people will give it a go because they're going to save. They've got to make cuts. They can't go to the boss, "Oh, give me a raise." That's not going to happen. So you got to cut your spending somehow. And Costco, I think, are going to do well even in a recession, and they've proven it. When you go over to the next page and you start seeing, some of their cash flow and things like that, just
$7 billion operating cash flow.
Yeah.
8 billion. Yeah.
Yeah. So it's gone up 3 times the operating since 2016. Freaking 3x. Like this is just, wish my income did that, within a couple of years. But, and then you look at how much debt they got. Nothing.
Yeah.
So
not much, is it?
No.
Not for a company that size.
Yeah. I remember they're building out all these places and everything. It's supposed to be capital intensive, and they got no debt. Like no wonder Charlie Mungan just loves the place. Walks in there, feels safe. Getting a great deal. Like that's Munger all over. And then they've got this scale economy shared. So all the money they save.
What about the I've always wondered about the cafeteria thing. Where the food there is pretty awful, but a lot of people use it. I have to say, when I lived in Japan, I went to Costco quite a bit, and it was packed. You couldn't get a seat in the bloody cafeteria. But I wonder, I mean, if I wonder, they make any money out of that thing, given that they make 98% of their money from the memberships.
I think they got like a $1 hot dog or something is their famous thing in the US, and then one of the CEOs was gonna up the price to $1.50 or something, and everyone lost their minds, and they said, "Oh no, we'll knock it back." But the thing is, they grow hot chickens. They've actually got their own chicken farms. To keep the cost down, and
oh wow,
and so they don't actually make any money on some of these lines, but they know people will come there just to get and then they got the petrol thing as well, and it's one of those systems, like they get 91% retention of their members.
Yeah.
So, and then it's growing each year as well. So each year they got more and more members. It's one of those things that's just really hard to break into and break that sort of network effect, which they've got now. So,
all right.
Yeah, that's what I just can't pick it over Amazon. That's my problem. Like, I think it's a bit too old school, warehouses and,
Well, it's a bit more boring, isn't it? It's a bit, I mean, where do you go from here other than automating a lot of it and cutting a bit of your workforce? I mean, maybe you could automate the cafeteria thing, I see there's a completely person-free McDonald's the other day.
Oh yeah.
And so I don't know, but maybe that's the next thing. Yeah, I mean, you can see Amazon's got more upside because they've got their fingers in more pies, and Costco's just doing this one thing. Yeah. It makes it easier to invest in Costco, though, doesn't it? It's like when it gets, well, does it ever get cheap? But when it gets sold off a bit, maybe it's
So that's the question you got to ask yourself. This is more stable, I think, and I think it's and Amazon can't really compete against them, like, because there's no delivery costs with Amazon. With Costco, I mean. Well, Amazon, you got to, you could be roll of toilet paper this week, and then another lot, in a couple of weeks' time. You got to pay for all that delivery and, Prime and stuff. So I don't know. It's one of those things. But I'm a bit too young to go in for Costco. Maybe I'm a bit ageist here, but it's still a great business. You can see how this is just going to keep compounding year after year, and I can't see anything eating into it.
Well, it's a matter of, I mean, so we agree it's good quality. It's a matter of what do you pay for it, and I suppose if it gets cheap enough, it would be worth it. But yep. All right. Well, maybe we'll leave it there, Tim.
Yep.
For this week. Thanks for bringing Costco, and we'll see the rest of you next time.